To all the bears out there, I would suggest you not watching this video because this video is going to make you very depressed. And for the bulls out there, you're going to be really pumped by the end of this video. Before I get into this video, I've noticed that 33% of you are not subscribed to our videos. My suggestion, click that subscribe button so that you can get daily videos from us that are helping guide people into the cryptoverse, right? So this is really important to help you stay on top of your crypto investments. So please like and subscribe right now. Okay, let's get into it. So check this out. Here we go. Credible. He's a great guy to follow on Twitter. He's one of the very few traders, even when we were back trading between 50,000 and 70-something thousand. And then we corrected back to 50,000, if you remember that. Okay, so he was one of the few people that were saying, hey, you know, we're gonna reach all-time highs and we're gonna blow past $100,000 in time, just relax and chill. Meanwhile, people were very panicked back then, okay? But what happened? We blew past $100,000 and now, and then we went to $126,000. And then now we're correcting a little bit again. Okay, so check this out. This is what he says. This perfectly demonstrates why I pay little attention to moving averages, MACD, or other lagging indicator crosses, closes, etc. The death cross gets its name because it's supposed to be a bearish trigger. It occurs when the 50-day moving average crosses the 200-day moving average and is supposed to signal the start of a bear market or downtrend, hence the name death cross. Now here's the kicker, guys. Despite this, the last 3 crosses on Bitcoin actually marked our local bottoms, all within 10 days or less of the cross and within 10% or less from our bottoms. So right now, there's very few people that are still bullish in this space. It's actually almost sinful to be bullish at this point because you get so much crap from posting anything bullish at this point, and you look like a kook because everybody thinks we're in a bear market. The people that think we are in a bear market right now are several types of people. They either got liquidated on October 10th during that $19 billion liquidation event, or they simply are new to this space. They haven't experienced a 35, 50, or 50% or 40% crash in this space. I've experienced many of those. Like, I can't even remember all the times that I've experienced a 40% correction in this space. This is what happens when you're involved with crypto for over 10 years. You're going to experience crazy amounts of volatility. At this point, I just don't even care. Like, this is just a ridiculous correction that we were having right now. I'm going to cover that in a second. Here we go. Nick Crypto on Twitter says, this dip has been the smallest of this cycle. It's 25%. Now this is versus 31% and 32% dips that we had during this bull cycle. Even the 31% and 32% dips that we had are still ridiculously small, guys. Like, it's not even enough to get me even the slightest bit worried at this point. I sleep like a log. I don't care what the price is at right now. Like, it's so boring at this point. I'm just waiting for the next impulsive move up. Meanwhile, people are so bearish and sentiment is the lowest I've ever seen it. So that is very bullish. Now he also goes on to say, but it feels so much worse. Sentiment is cooked. Well, I mean, it depends on who you are if it feels worse or not. I feel fantastic. Like, I'm loving this dip. Perfect opportunity, especially for people that don't have a good bag or are not happy with the bag and feel like they missed out when Bitcoin was skyrocketing to $126,000. This could be a very good time to dollar cost average. Actually, I just wrote a post on learningcrypto.com that shares with people a strategy that will help people dollar cost average into Bitcoin as we go down, if we start going down more. And if we start going down more, I'm going to be a very happy camper because I've already sold during the last time we busted through all-time highs to 100,000, 105,000, and 110,000. I sold about 30% of my Bitcoin. And guess what I'm going to do with that? I'm going to buy it back. And this is why I take profit when everybody was so bullish. When I took profits, by the way, guys, that was when everybody was like, they thought it was just going to go up forever because Trump was introducing a more crypto-friendly environment for the US government, and the ETFs were exploding and Trump coin was coming up and all that other stuff. And that's when I'm like, okay, I'm going to take some off the table, and all of my members saw it, and they're probably very happy if they took a little bit of profit. And some of them are probably buying at these levels and are dollar cost averaging on the way down. Perfect. Now let's also go over to this, okay? Markets don't crash because everyone is terrified. They crash when everyone is euphoric and certain it can't crash. And this reminds me of when Saylor publicly said, irresponsibly said, that we will never enter another bear market again. I mean, and I'm like, underneath this post, I'm like, wow, what a top signal, dude. This guy, oh my gosh. So with that said, just relax. You know, when people are miserable like this is when you really want to take your emotions out of this game and start maybe dollar cost averaging. I never say go all in on anything, okay? You dollar cost average on the way down. So in other words, if you have like, say, $10,000 and you want to split it a couple ways, you go like, say, this is just for example, if you want to buy at $90,000, you put $1,000, and buy at $85,000, you put, you know, $2,000, and $80,000, $3,000, and so on. That's how I would personally play it, or I would jump $10,000 per buy. You know what I mean? So in other words, I'd have like a $1,000 buy at $90,000, a $2,000 buy at $80,000, $3,000 buy at $70,000, and so on. And that's how I would spend that $10,000. That's just an example. This is not financial advice. This is just entertainment purposes only, right? Okay, so now let's also go to Kabisi letter. Extreme fear hit a new low. This is on the S&P. The S&P was quite literally at record highs 11 days ago. Emotional selling is the best buying opportunity. Absolutely. There's very few people that understand how to invest in crypto. As you all know, after the big $19 billion liquidation event, you all know when the tide went out, you all know who was swimming naked. It was very clear as day. I would say over 90% of large accounts in crypto got liquidated, got destroyed, and a lot of them are broke now, which is very sad. They could have just responsibly stayed out of leverage and bought and dollar cost averaged and long-term held, but they decided not to because they're greedy. Now check this chart out. This is why I'm so like, I couldn't care less about this stupid dip that we have. Check this chart out. 38% dip, another 38% dip, a 33% dip, a 38% dip, a 36% dip, and a 29% dip. That was on 2 bull markets ago. As you know, the last bull market, we had a 55% dip. People would be literally flying off buildings on a 55% dip. But here, you know, we're down, what, 25%, 20-something percent? Absolutely nothing to be concerned about. With this said, let me know what you think in the comments down below. I'm very interested in hearing your thoughts, and if I'm completely wrong or if you agree with what I have to say, talk to you guys soon.